Hey, it's Jordan, and this video is being recorded on the evening of Thursday, January 5th, 2017. And in this video, I'm going to focus on a divergence that appears to be taking place and perhaps growing between gold and the gold stocks. First, I have a little bit of a cold, so that's why my voice may sound different. And although I have a tendency to talk quite a bit, I intend for this video to be shorter, but we will see. Now, the divergence is evident, especially on the monthly chart. And what we have here is GDXJ at the top and gold at the bottom. Now, you can use GDX or GDXJ or really any minor index, but since I focus on the juniors, I have GDXJ here. But as I said, any index, it looks fairly similar, although GDXJ is showing more strength than GDX based on the fact that it's holding above its spring lows, and now the spring lows for gold we're in the low 1200s. So of course gold is below that, and now GDXJ is almost 20% above those lows. But in the bigger picture, we can see the 20-month moving average on GDXJ. You can see that it was an excellent trend indicator during the bear market, and it still is, because in December, GDXJ bounced off the 20-month moving average and closed well above it. It even closed above 30. Now, with respect to gold, we can see that gold actually closed below the 20-month moving average in November and then again in December. We'll see what happens this month, but so gold closed below it 2 months in a row, is still trading below it in month three. Obviously, the month of January still in the first or second inning, any way you want to look at it. But you can see with GDXJ, again, it tested it a month ago, bounced off it. So that's the divergence that we're seeing, is that the miners have held above the 20-month moving average, and gold will try and recapture that. We'll see if it can close above it this month and next month. But I think going forward, we have two scenarios, and now it looks like the miners are going to rally up to the important targets I discussed in the last video, and we're talking about 25, 25 and a half for GDX and around 39.40 for GDXJ. And so one of the scenarios would be that gold is going to go eventually, after this rebound, go down and retest 1050, maybe even test 1,000 before its bear market is over. And in that scenario, perhaps the miners they hold up above the December lows. Perhaps they retest the 20-month moving average again. So that is how this divergence could continue. Um, if the miners are going to have a very strong close this month, and uh, in other words, if they get up to 39.40, they close the month close to it. Um, I would be surprised if then they ended up going back down and losing the December lows and the 20-month moving average. Now, the other scenario is that perhaps the metals are in this, um, or I should say, perhaps they are forming the right shoulder of a huge, complex, inverse head and shoulders bottoming pattern. And of course, in that scenario, we'd probably see the miners, they'd continue to lead, but perhaps this rebound would go to 40 in GDXJ, then have a small pullback to the mid or low 30s, and then trade up to the highs around 50 or 51, whatever it is. But clearly, whether you look at gold or the gold stocks, I mean, over the last 3 or 4 years, there is this kind of big, complex head and shoulders bottom developing. And with respect to GDXJ, you have a breakout target of, I think, about 83. And of course, that's not triggered until we see GDXJ essentially trade above the low 50s or 50. I mean, we got to see a weekly close or even a monthly close above it. Then the 83 target gets triggered. So, I mean, that from as of a couple days ago, I mean, that was a potential 150% move. And that move, I think that breakout, we'll see that breakout first in the miners, and then the metals gold specifically will follow. And if you look at gold, I mean, the potential target for that, I think, is, I mean, depending on how you measure it, I get about 1600, obviously 1550, that's the next major resistance. So that's really what we're looking at, I think, over the next uh, 18 months or so, possibly 24 months, but let's just say over the next 18 months, we're looking at potentially gold getting up to 1550, 1600, and then GDXJ getting up to 83. But yeah, so those are the two scenarios. And so the next several weeks will be very interesting to see how the gold stocks react when they get to that resistance. As I said, around 40 for GDXJ and 25. Just it's a lot more visible when you look at the daily and weekly charts, and there'll probably be some kind of a pullback at those levels. But it would be really, really bullish if we see a pullback for a few weeks and then we see the miners take out those levels and retest their highs. I mean, I have not been favoring that possibility, but that's something to keep in mind as we move forward. Again, the main point here is that the monthly chart, which is more important than weekly and daily, we can see a clear divergence where the miners are showing strength and they appear to be leading the metals and even diverging as the miners held above their 62% retracement and 20-month moving average while gold did not. And the other thing is, you go back a year, the gold stocks were 1 week away from being in their longest bear market ever, their worst bear market ever. I've talked about it. You can value any way you want to look at the gold stocks. They're basically trading at a 90-year low relative to the price of gold, relative to the S&P 500. And so where we are right now, gold now, if the bear market is still in place for gold, it's the longest bear market ever. So, and as we know, the gold stocks, they started weakening 2010. Uh, some of the indexes, they made a brief new high when gold peaked, but for the most part, they really peaked out in early 2011, and for the majors, late 2010. And so it makes sense that we're seeing them lead gold. So again, I guess I could go on and on about this divergence, but uh, how is it going to play out? I mean, which of those two scenarios are we going to see? Time will tell, but I think we're going to follow one of those scenarios. And this chart I just updated. I'll be sending it out to subscribers with more analysis. But this is my Junior Gold Index bull analog. And so what we have here, we have the 2008 to 2011 bull market in the juniors and in my index. That's in red, and then in blue we have the 2001 to 2007. And the other line is in 2004 we changed that index and put in our basket or a basket of silver stocks around 2004. So silver stocks from '04 to '07 really outperformed gold stocks. So that's what we see in that line that's almost up 100-fold or about 100-fold from the bottom. But one interesting thing here is if you look at 2008 to 2011 and then 2001 to 2004 when we had that 18-month ABC consolidation, up to that peak, you can see about the middle of 2018 on the chart, both indexes, they got to around 1300. Now the index right now I think is around 230. I could be wrong, but that tells us that there's potential for this index, which is around 230 right now, or there's historical precedent for even from where we are now to see a 4 or 5-fold move in the index in the next 18 to 24 months. So, and we just had a 45% correction, but I mean that's normal when you're looking at these analogs. We can see the kind of smaller corrections are around 25%, where the big corrections are 45 to 50%. I mean that huge but brief bull market we had '08 to 11, we basically had numerous 20 to 25% corrections along the way, but it didn't have a real major correction in the order of 45 to 50%. Perhaps that's just one of many reasons it only lasted 2.5 to 3 years. But anyway, that's all for this video update. Thank you so much for listening and following. You can follow all of my work at thedailygold.com. Opt in there for my free newsletter. And also consider subscribing to my premium service. It costs less than $1 a day. I put out a huge amount of work. I think you're going to find it really helpful and actionable. I should say a huge amount of work on the technicals of the market, but also the technicals and fundamentals on my favorite junior mining stocks and stocks which I think are going to outperform uh, the indexes in my own index, which I had on the last slide. Anyway, that's all for today. Thank you so much for listening and watching this video, and I look forward to publishing another video update for you in the next week or two. Thanks, everyone.